Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Snap Inc. quarterly report. Snap Inc.'s business services overview. The company offers a diverse range of services including 1. Snapchat, a visual messaging application with various features such as camera, visual messaging, Snap Map, Stories, and Spotlight. 2. Snapchat Plus, a subscription service providing exclusive, experimental, and pre-release features to subscribers. 3. Spectacles, an eyewear product that captures photos and videos. 4. Advertising products. A. AR ads. B. Snap ads, single image or video ads. C. Collection ads. D. Dynamic ads. E. Story ads. F. Commercials. G. Sponsored snaps. H. Promoted places. Snap Inc.'s stock price plummets. A year of disappointment in the past year. Snap Inc.'s stock price has taken a significant hit, plummeting by over 33.31%. Several key events have contributed to this decline. The company's disappointing Q2 2025 financial results were a major blow, with revenue missing expectations and average revenue per user, ARPU, falling short. A critical error on its advertising platform further exacerbated concerns. The lack of guidance for the second quarter and underwhelming first-quarter performance also weighed heavily on investors' minds. Moreover, persistent issues with user engagement metrics have plagued Snap Inc., with U.S. time spent declining by 14% year-over-year and global time spent falling by 4.7%. The evolving digital advertising landscape, intensified by Apple's iOS privacy changes and increased competition from platforms like TikTok, has also impacted Snap's ad revenues and user growth. These factors have cumulatively led to a significant decline in Snap Inc.'s stock price, making it one of the most notable drops in the past year. The primary drivers of revenue growth or decline for a company can be categorized into several key areas. User-related factors such as user engagement, retention, and content contributions play a significant role in driving revenue growth. Effective advertising strategies, including attracting and retaining advertisers, pricing, and monetization of new products, also contribute to revenue growth. Regulatory and compliance issues, such as changes in taxation laws, digital services tax, and global minimum effective corporate tax rate, can negatively impact revenue. Financial and market-related factors like currency exchange rates, import/export restrictions, and manufacturing/supply chain problems can also affect revenue. Company-specific factors, including loss of key personnel, difficulty attracting/retaining talent, and external macroeconomic uncertainties, can further influence revenue growth or decline. Lastly, other factors such as announcements by the company or competitors, changes in operating performance, and developments in new legislation can also impact revenue. Net income and profit margins have undergone significant changes over the past year. Notably, net income is not available for 3 months ended September 30, 2025, indicating a potential issue with financial reporting. However, it is reported to have decreased due to increased competition and market share loss. Profit margins have also been affected, with free cash flow margin decreasing to 60.1% for the 9 months ended September 30, 2025. This decline may be attributed to increasing expenses outpacing revenue growth. Furthermore, profit margins are expected to be impacted by regulatory inquiries, litigation, and reputational harm. The anticipated negative impact on net income is due to increased costs, potential disruptions from restructuring, and difficulties in maintaining corporate culture. Overall, the company's financial performance has been affected by various internal and external factors, leading to a decline in both net income and profit margins. The company's financial performance indicates a strong ability to generate positive operating cash flow. The data from the 3 months and 9 months ended September 30, 2025, shows consistent positive results of $146,488 and $386,592 respectively. This trend suggests that the company is effectively managing its operations to produce a surplus in cash flow, indicating financial stability and health. The company's debt level has undergone significant changes in the past year. While long-term debt decreased by $116,779 at one point, it was later offset by an increase in senior notes issued for $2.05 billion. The overall debt level increased, with cash and cash equivalents and marketable debt securities also increasing. However, interest expenses have seen a substantial jump of 165% from $4.492 billion in 2024 to $11.742 billion in 2025, primarily due to the conditional conversion feature and potential reclassification of convertible notes as a current liability. The company's financial performance varied across different segments and regions. While the overall adjusted EBITDA saw a significant increase of 38% and 43% for the 3 and 9 months ended September 30, 2025, respectively, certain areas struggled to keep pace. International markets were a notable underperformer, with poor results attributed to increased business and economic risks, limited experience, and inadequate infrastructure. Emerging international markets faced intense competition from other applications vying for limited mobile device storage space. Regional social media platforms also lagged behind due to their weaker positions in specific countries. Furthermore, markets with limited or no experience in marketing, selling, and deploying products and advertisements struggled to effectively monetize the increase in daily active users, DAUs, leading to potential increased costs without corresponding revenue. These areas require attention and improvement to enhance overall performance. Management's outlook for the company is cautious due to various risks and challenges. They acknowledge volatility in trading prices and potential dilution of stockholders through equity issuance. Despite these concerns, management remains committed to key strategic priorities, maintaining and growing the user base, investing in content creation and advertising, and expanding internationally. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as evidenced by references on pages 12 and 62. Secondly, the company has also implemented share buybacks, with multiple instances documented on pages 16, 45, and 92. Concerns about inventory buildup and supply chain disruption. There are several concerns regarding inventory buildup and supply chain disruption. The potential for labor shortages and disruptions, page 59, is a significant concern, as it can lead to delays in production and delivery. Additionally, macroeconomic uncertainties and global economic conditions, page 62, may disrupt trade and intensify problems in the global supply chain. Cyberattacks and vulnerabilities in third-party systems, page 69, also pose a risk to supply chain stability. Furthermore, manufacturing processes are complex and require continuous modification, making them susceptible to delays or component shortages that could impair distribution of products, page 85. These concerns highlight the potential for inventory buildup and supply chain disruption, which can have significant consequences for businesses and economies. That concludes the financial summary for Snap Inc. Feel free to comment below, and I will be happy to answer them when possible.